So this is going to be a Patreon member only video. First of all, thank you so much for supporting me on Patreon. It's grown significantly over the last few years, and I figure who knows where it's going to go. Maybe it'll keep growing and allow me to spend more time doing investment research, which would be a lot of fun for me, and I hope valuable for you guys as well. But I hope to do more of these kind of exclusive videos and bring more content and value for you guys as Patreon members. But thank you so much for being my members. But this video, I kind of want to just informally look at some early thoughts on Q4 for Lemonade, because there's some interesting stuff, it seems, going on. Unless I'm missing something, it seems like Q4 is going to be a very strong quarter, or potentially be a very strong quarter. And this has kind of been, perplexing me a little bit, even since the Q3 call. Just really hadn't had time to stop and look at it until now. And so here's the first thing. They gave guidance for Q4 during the Q3 letter, adjusted EBITDA of -29 to -25. That's fine. Q4s, they've often done better because they typically have spent less on growth, because it's a more competitive growth marketing market. Shai told me that directly once. He said, hey, Q4, you have Christmas time, the marketing spend LTV to CAC ratio is just not as fruitful during Q4. Q3 is the best quarter. That's when they get the most bang for their buck. And a lot of people are moving, etc., etc. So Q4, you don't expect, if they're spending less, typically, then your adjusted EBITDA looks better during that quarter. So that's why you have -29 to -25. But then they said during the earnings call, I think it was, pretty sure this was Tim's comments, yeah. He said during the call, from a, I should say, growth spend perspective, we expect to invest roughly $35 million in Q4, which is nearly 3 times the growth spend from Q4 in the prior year. So flip over to our model here, and that is so $35 million here in sales and marketing variable spend, or growth CAC spend, I'm calling it here. $35 million, which makes sense. About 3 times, or at about $13 million the Q4 prior. Think about it, all of last year, they only spent $54 million on growth spend, and this quarter alone, they're talking about spending $35 million after just spending nearly $40 million in Q3. So this is a huge spend. And actually, at the start of the end of last year, start of Q1, Q4 results for last year. So yeah, last year was about 55 million. They said they're going to roughly double that. So I was expecting for this year about 110 million is what I was modeling. But they're actually, if they do, so I was thinking more like 25 million in Q4 would get to the 110 mark. But with this comment saying they're going to triple the year prior and be 35 million, you're talking, now they're going to spend 120 million this year. So more than double the growth spend of last year. It's a lot of growth spend. But right away, when I heard that they plan to spend that much, like 10 million more, and that the adjusted EBITDA was going to come in, like below a $30 million loss, like $29 to $25 million loss. And if anything, they typically skew to the better part of this range and often even beat the lower part of this range. Who knows? Maybe that's not going to happen this quarter. Maybe their guidance is becoming, more realistic, or more not as conservative. But whatever the case, even to hit this range at that level of growth spend, it's something is happening. So I had a chance to look at it a little bit. I've highlighted some of the key variables we're looking at here. Your top line IFP, your gross loss ratio, and net loss ratio. I've been taking it at 1% worse than the net gross loss ratio. That can vary quite a bit depending on other factors in the quarters, but taking that amount. Adjusted gross profit is a metric I haven't typically tracked in my model, but I put it in here for Q3, and then am showing it now for Q4, just the quarter in question here. For me, it's been, if you pull it up here from their letter, they make a number of adjustments. For me, it's kind of hard to follow or track. You could, I guess, sort of look at these in the trend lines. Maybe I should do that, but they start with revenue. They make adjustments to get to gross profit, and then they make further adjustments to get back to what they're calling their adjusted gross profit. So I won't go into the details of that there, but I showed that there for Q3, and then with those same adjustments, assume that those adjustments stayed the same. They could vary a little bit each quarter, of course, I'm sure they will, but the same adjustments projected that into Q4. And the reason I'm also looking at adjusted gross profit, as well as I have the last box circle in red down here, adjusted EBITDA, which we were talking about earlier from their guidance. The reason I'm also showing adjusted gross profit as another metric is because I tweeted this out the other day. Shout out to Aaron. He made a post the other day, and him and I were chatting about it on Twitter, where he was counting the pixels from this slide from Investor Day, and basically saying, hey, based on this slide, he counted these, sort of figured out what the size of each relative box would be, knowing that, this 2023 was 97 million adjusted gross profit. This was 65 million in 2022, and then we're taking the size of that box, going forward. You can see that, hey, for Q4, the remainder of 2024, they're expecting about 65 million in adjusted gross profit. And actually talking to him just through messages, and he said it's more like he got more, got the ruler out more precise, and it was more like 62.5 million. So anyways, somewhere in there, obviously this is just a projected number that they're putting on a slide in gray, not trying to give us a detail. So there's probably more of a larger tolerance in kind of what these projected values could be. Also interesting to know, you look at this, we had 97 million adjusted gross profit last year. They're going to increase that by, get to say 160, 70. It's like a 60, 70% increase. And then again, 2025, they go from 170, say, to 250, and then from 250 to 350. The next few years, we're starting to form that hockey stick is forming, and as your gross profit soars and as your operating costs stay fixed, that's the hockey stick I've been talking about so much. That's a little tangent aside, but again, we'll call it 62.5 million is kind of what management is telling us they're going to get for Q4 adjusted gross profit, just not in complete details, just kind of a little bit secreted, a little bit hidden. You have to do a little bit of the harder work like Aaron is doing. So I've plugged that in here, and you can see for the values I've put in, this is where I'm starting to scratch my head about Q4, or say, well, this could be maybe they're expecting a really strong quarter, is because even at 950 million IFP, and a bit of a long equation here, that's sort of my own predicted numbers for the Q4 result. I won't go into all the detail here because it just sort of matters what the number actually is. And again, going back to their guidance here, they're expecting 940 to 944 million. And so I'm saying, hey, they tend to beat their IFP. Sort of rough calculation here says, let's say they beat the better end of the estimate by a little bit, and it's 950. And then I'm saying, a pretty strong gross loss ratio, 65%. This is after 73%, which also, was considered strong last quarter, 65% now. That only, even with those two figures, that's only getting me, on adjusted gross profit to about 56 million. So still short, still shy of, this 62.5 that we're looking at over here. And then if you flip down to the bottom, adjusted EBITDA, you're barely in the range that they're giving us for the guidance on adjusted EBITDA, minus 29 as the worst end, up to minus 25. And we know they have a history of, if anything, tending to hit that range or be better than it. So I'm still not even quite in that range. I'm just barely on the edge of it here. That's with a beat on the IFP and a really strong gross loss ratio. Now, if we could, now let's just say this, they do, like they say they do 960. Like it moves, see there, it barely moves adjusted gross profit. It moves it a little bit, but the bigger factor lever in the equation here is your loss ratio, because that applies, of course, to the whole book of business. If you beat the big book of business by 10 million more or less, that has some effect, but not a crazy effect. But let's say, let's just say they go to 960 and 65%. You're still way too low on adjusted gross profit. You're a little bit better in adjusted EBITDA, so that might make sense. I mean, that would be a really strong quarter. If you really want to move the needle, though, you got to lower the loss ratio. So let's say it's like as low as 60s. Again, I don't know if this quite makes sense. I mean, I do expect the loss ratio is going to be low. But let's just see the results here. 960, 60% loss ratio. Now you're at 62 million adjusted gross profits, exactly where we're kind of expecting it. And your adjusted EBITDA is like minus, 23, minus 24. So, right, again, just sort of outside of that range in the positive direction. So, but that's with a 60% loss ratio, 960 IFP, which of course would be a super, super strong quarter if they posted those results when they post them in February. Now, maybe you think this loss ratio is just unrealistic. Maybe it's 65%. I mean, you're gonna have a huge beat on the top line. Like you say, you go to 990 at the IFP level. You're still, well, now you're kind of close to Aaron's pixel counting there, minus 59 million adjusted gross profit, and you're perfectly in that range. So maybe something like that's possible. But again, it'd be a massive beat. You're talking 32% year-over-year growth on IFP, when they're only saying like next year they're going to be like high 20s and then 30% or more after that. So I really don't think that's going to happen. But I'm really wondering, it's something I'm going to dig into further, is that the loss ratio might just be stellar for this quarter. And if you look at gross loss ratio ex cat, the trend, and we did have a couple quarters that were like low 60s, 63%, 62%. They keep canceling more and more of their home business. I mean, that was actually in right here in the letter right after that they said, or not the letter, the earnings call right after the note I pointed earlier, they said, we noted they expect to remove about 25 million of IFP from homeowners in the second half of 2024. 2/3 of that were done in Q3. So 2/3 of that were cut out in Q3. Now they're no longer affecting Q4. And Q4, of course, they're cutting out more of that. So I kind of wonder, like maybe the cat's going to be tiny because their homeowners portion of that book, especially any sort of risky homeowners, got really small. And then maybe the ex-cat figures are, as prices keep raising, maybe gross loss ratio, ex-cat's like 60%. And then the loss ratio, the cat portion is like 2%. And you have like a 62% ratio, like something like that, I don't think is crazy. And so say we put in 62% and maybe they do like 960 top. You're at that 60 million adjusted gross profit, again, in line with what Aaron's was pointing out. And we're at the 25 million IFP range, which, falls right in line with what their guidance showed, which, I mean, I think, I don't know, macro-wise, what's going to happen to the market, or, all other things considered, who knows? But for Lemonade themselves, oh man, this would be I think the market would love that, that kind of result from them. So this is something, I wanted to give you guys, for supporting me, this sort of early access to these thoughts I'm digging into here. And if there's anything I'm not seeing that you see, just please let me know so we can all learn together. But otherwise, I'm going to be digging further into this, and especially in the loss ratio. But right now, I'm thinking, like, my guess is that it's gonna be like a really, really strong quarter. Thank you so much for watching, and remember, it's in the bag.